We're now joined by Roger Williams from Centaur Asset Management, still with us, of course, Nerina Visser. Roger, let's talk over the broader market picture right now. Are you overall optimistic, or are you of the view that you need to be protected when you are exposed to equities and buy into those growth stocks as opposed to the value stocks?
I think at the moment I'm generally neutral on the market. The market's had a hell of a month, up almost 9%. But I think it's very important now to really look at the quality of companies you're investing. Just buying cheap may not really work. I'd look for the growth is very critical, and the companies that can deliver in terms of earnings growth should, I think the share prices will follow. So that's my most critical.
Are you willing to pay for the stocks that offer the growth though, or are you still looking for value within that space?
Well, I'm a growth at a reasonable price type investor. So I think it's critical you don't overpay, and that's really the critical question, the trade-off between growth and value. So I look for opportunities where I think there's a margin of safety, but pretty certain growth. So, for example, in this recent mini crash we had in September, I was buying Richemont, which I think is a great quality company, very well positioned, and I thought the price was reasonable that I pay. But now at 46 Rand, I'm not so certain whether I'd buy it at that price.
What is your view, Nerina? Do you think that markets are fairly priced right now, or do you think they're looking slightly expensive? Or would you say they're looking cheap? From a PE perspective, they're looking relatively cheap. That said, earnings could be affected by slower growth globally.
Absolutely. It's all about the earnings. You know, for me, it's not so much about where the price is at the moment, but whether the price is pricing in the correct level of earnings, and who knows what the correct level of earnings would be. I think that's where the jury is out. Exactly how is the global economy going to play out? How will that translate into corporate earnings? And that will, of course, either provide support to current valuations or not. And I would certainly agree with Roger in terms of that you've got to do your homework. You've got to go and find those stocks that actually do present the correct value, because to try and say that markets overall are either fairly priced or overpriced or underpriced, I think you are really trying to throw too much really into like the witch's cauldron, you know, and I think that's a bad brew that's going to come out of that one.
Roger, your stock picks, RMI, Discovery, Coronation, and then Village Main Reef. So the one that obviously stuck out for me is Village Main Reef. Explain why, and how much are you allocating to this stock?
No, it's a very small allocation. It's a small capitalization of only about 1.5 billion at the moment.
And quite illiquid, I would assume.
Quite illiquid, but you know, it is risky, but it could have major upside. It's a gold miner with 2 mines producing about 180,000 ounces of gold. And with the gold price where it currently is, and technically looking like it still could go further, that could pay off the share price in almost maybe just over 2 years. And then in addition to that, it's also got platinum exploration interests where they're firming up and doing a bankable feasibility study. And that's a 42 million ounce resource and pretty close to ground level.
Why not Goldfields, which is a gold mine and also has platinum aspirations?
Well, if my numbers are right, it's almost on a 2 PE, whereas Goldfields is closer to a 15 type PE. I'm not sure at the moment. But also then you're also getting the platinum interest. It's also got antimony mines thrown in for free. So I think it's up to a 60% discount to a breakup value.
And there's a reason. Do you think there's a reason the stock is so cheap, Village Main Reef?
Definitely. You know, this is a real trick or treat stock. It can go either way. You know, it can either trick you and you will lose your shirt and then some, or it can be a real treat. So I think this one is definitely one for the more higher risk appetite investors. But I think at the level of the pricing and the valuations, definitely worth it.
Okay, so on a more cautious note, RMI, Discovery, and Coronation being your other 3 stock picks.
RMI's it's got 3 main components. Outsurance is about 40%, Discovery and MMI are 30% each. Outsurance, I just think, is an unbelievable business. Its return on equity in South Africa has been over 40% for about the last 6 years. Very high margins, very strong brand, so a recurring income stream, and they're also going into new avenues to expand their growth. So they've moved into Australia. Hopefully that will break even over the next 2 years. They're in commercial, and also they're moving into direct life assurance. And on my numbers, RMI is on about an 8.5 forward PE, a dividend yield over 5%. I'd definitely qualify that as good value and quality at a very good price.
The scariest issue right now for you? I know that you've pinpointed iron ore, And iron ore prices down significantly, which is quite scary in itself.
Iron ore is down, according to my Bloomberg numbers, down about 30% this month, from $185 a ton to about $130. And iron ore is a chief component of Kumba, Exxaro, Anglos, and also Billiton. So if the price continues to tumble, I think the market's saying, listen, this is more of a fair market price. Those stocks could come off quite significantly if this continues to tumble.
Okay, very quickly, Nerina, your bloodiest stock is?
Well, it's got to be a paper trade. You know, I've had some really bad paper cuts in my life, but I think the paper cuts and the bleeding that investors have experienced from SAPI over the last 4 years have just been really, really, really scary and bloody.
And trick or treat?
My trick or treat, you know what, I went and dug around in the Alt-X, and there's a little stock called Bioscience. Now, Bioscience trades at all of 1 cent. Now, that's a real trick or treat. If you buy at 1 cent, you're either going to lose everything, or just going up to 2 cents, it can double. Now, having a look at some of the other stocks in that sort of category, you know, just today, Pointing, for example, a telecommunications company on Alt-X, they were up 67% today. On the contrary, Huge Group, also in the telecommunications business, was down 19%. So these are real trick-or-treat type of stocks. I think even more risky and more scary than the Village Main Reef story.
Value or value trap, clearly. Roger, very quickly, last thoughts from you.
On which one?
Whatever you want, trick or treat, bloodiest, whatever you want.
Well, SAPI, I've unfortunately had a couple, and that's really
You're bleeding.
murdered me. Fortunately, I've had some other things which have compensated, but that's been really bad.
Fantastic. We have to leave it there. Thank you so very much to both of you for joining me. Great to have you on the program. Roger Williams from Centaur Asset Management, and of course, a big thank you to my co-host this evening, Nerina Visser from Nedbank Capital.